Hey guys, this is Simon with Trade and Perform Coaching. Wanted to do a trade review for Thursday, and mostly this trade review is going to be aimed towards the people that are in the trading room. I will I'm trying to get back into the habit of doing nightly trade reviews, or at least multiple times a week. And for tonight, I am in the new office, and everything isn't quite like I like it. So I'm just going to make this short and sweet so that uh, my clients have a trade review, and I will share it with the general public. But it's really designed as a follow-up to this morning's market preview. Anyways, jumping into it. So we have a couple of things to look for out of a gate when we have a gap, right? So let's go through those items and see if we can identify what has been going on. So first of all, since I don't have a drawing tool, I'm just going to use this circle as highlights. So first of all, we gapped up, right? We opened just above 2095, or just at 2095, and we drove straight up out of the gate. So the first thing to go through the checklist with regards to open drive higher is, did we have an attempt at half gap? No. Did we get gap fill? No. Instant indication that we have open drive higher, right? The next tool that would help us out in terms of quickly identifying whether the market was going to roll down or not would have been the tick, right? And if we look at the tick from the open, and let's pull this back in here real quick. Let's see if they will let me. Here we go. Soon. Okay, so out of the gate, the market jumps to a positive 1,000 tick, but look, let's see if I can pull this in here enough. Okay, as the tick comes in towards zero, right, and we finally hit zero right here. But even prior to hitting zero, as the tick is coming in, there's no responsive sellers in ES. So what does that mean? What is that indicative of? If the broader market's getting selling pressure, but the S&P is not, it's either sustaining the selling pressure, or in this case, it actually popped up prior to getting to a zero tick. What that means is, as soon as the broader market pressure is lifted from the downside move, obviously all the sell pressure will come off the S&P 500 as well, and it should rotate higher. So that was the first clue, the move towards the zero tick, and absolutely no rotation down. We had less than 3 points of rotation after having a significant 10-point plus gap. First clue. Second thing that was indicative is the lack of rotation. There was sub 2-point rotations out of the gate, indicative of a lack of sellers, right? And then if we go over and look at NQ at the same time. Oh, and then the last piece. We immediately traded above Wednesday's high and Globex high and held above, okay? So same thing when we give our checkup really quick to NQ. So NQ opens up above Wednesday's high, immediately clears Globex high, and importantly, in the first bar, blew right through this open gap, right? You can see it really just had no resistance whatsoever. The first place it ran into resistance was plus 60 points. I had discussed how recently in the market that plus 60, minus 60 had become an important inflection point for the marketplace. And sure enough, it respected that inflection point, but there was really no rotation lower. I mean, when you're talking about a rotation from 45.15 down to 45.10, that's 5 points after over 60-point rotation up. That's pitiful on the downside. There was just no sellers. Okay, so let's go through that one more time. Gap up, no half gap on either NQ or ES. They're both trading above prior day's high and Globex high. There's a lack of rotation in either market to the downside, and both markets are driving, and the NYSE tick is coming in towards zero, and there's no sell pressure. So, okay, those were the facts. Now I want to come back in with balance, right? How do you balance that out? You take that information and you go, okay, I know that I want to trade. I want to look for a long trade, but it can be frustrating if you're a disciplined day trader. Most disciplined traders in ES are either waiting for a rotation up or they're waiting for a rotation down. One of the two. Okay, so if they're The rotations up, obviously, we're looking to fade them to the short side, and the rotations down, we're looking to take to the long side. The frustrating thing about a trend day up is obviously all you end up with are constant rotations to the upside. You take those rotations to the upside only to get bopped on the head, right? And you end up with loss after loss after loss. So I want to go through how I handled that in my own trading today and what position I took to get that fixed. So out of the gate, first of all, I have not been trading NQ. I've been focusing all my energies on ES. I actually called a short. My first short of the day was right up here near 21. I want to call it 2109, 2110, somewhere in this neighborhood. And right at the first hour high, I was unable to get, from the time I entered the trade to the time I stopped it out, I was unable to get more than 4 ticks in my favor. I kept tightening up the tick. The stop, I originally started with a 3-point stop. As time wore on, in the trading room, I had warned, it's been over 10 minutes in the trade. We're unable to get a rotation back to the downside for even 6 ticks, much less barely 4 ticks. This does not bode well for us. Also, there's no weakness in NQ. As a matter of fact, when I was short in this position right here, NQ actually got a bit of weakness. Here, I'll show you. It actually got this bit of weakness. This is the exact same time, right in here. And you'll notice that ES, in that same bar, never participated with a strong downside bar. So I ended up covering that trade for flat after being in it for 10 minutes. Next trade that I took was up here in this 2112 neighborhood. I forget exactly where, if I took it at 2113 or 2112 and 3/4. Again, I was stuck in the trade for over 10 minutes, unable to get more than a 1-point rotation down. I was consistently tightening my stop to eventually I had the stop at, I want to say, I don't remember exactly where. I know I lost 2 points on the trade, and the trade was called out on half size. So what's the reason for going to half size here? Well, first of all, we're in a straight open drive higher, but that you got to balance that against one of my favorite trade locations, right? We already had over a 20-point extension at that point from the prior day's close to that 2114. Huge stretch up into that area. I anticipated that we would be able to get at least a 2 or 3 point rotation lower. And it's at this point, this is where I actually took a 2-point stop on half size, so net for my regular trading size, 1 point. That's totally acceptable. But what I instantly recognized emotionally that I was getting frustrated. And for me, once I get frustrated, right, when the market's not doing either what I want it to do or my read is completely off, it doesn't matter which one it is, either a false expectation or demand I'm putting on the market, or a frustration from an inability to get a profit from a trade that I normally would. The trades I took were very high odds setups, and normally I'd be able to get 1 to 4 points on those trades on most days. So yes, I got frustrated. So as soon as I recognized I was frustrated, that's when I stop, revert back to my trade plan, right? Revert back to my trade plan, which says there's no point in getting frustrated in the trade. That just leads to more losses. And I simply chose to exit out of the market. Now I can tell you, I did also try to capture a long right down here at 2100. Right after this bar was formed, I had a limit at 2100 and I just couldn't get filled. I actually saw that we were going to continue to drive to the upside, and so I had the frustration of not getting long right before just a huge ramp up. Right, that was essentially a 8-point move from here to here. I got through this trade, spent 10 minutes, was unable to get even a 5 or 6 tick scale, stopped break even. And then I had my third trade. That's 3 trading decisions in an hour, none of which worked. Now, I could have sat there and chosen to fight it, right? And what most likely would have happened is I would have tried to take a short here, and that may or may not have worked. But then I probably would have also tried to take a short here, and I may have just come up and gotten stopped. Instead of spending energy in a market that's not a market that I know I make a lot of money in, I chose to withdraw, right? And then I tweeted in the afternoon. I believe I did this both publicly and privately. I may have only done it in the private Twitter feed, but this is the private Twitter feed here. And you can see that I came in and I put a close. It should have said above 2110 as a prelude to a breakout in ES. Now, when I posted that, we were trading at the time. We were trading at this 2114. We obviously pushed to 21, almost 2120. Backside tested right down to 2110, right? And you can see how they held support right there. And then we rotated back up to 2116. I was still gone out of the office when we backside tested that 2110. Otherwise, I would have liked that for a long position. And then really there was nothing much for me to do the balance of the day. I think the important thing here is to recognize who you are as a trader and where you make your money. I don't make my money on trend days. It's okay for me not to capture a trade. Okay? What's not okay is to bury myself on a day like today. Even a 1 or 2 point loss, who cares about it, right? I know that the day after trend day, I should have a very good trading opportunity. Secondly, prayfully, right? We continue to break out to the upside. We hold that 2110, and the long side trade becomes much, much easier. That's my sincere hope. I know that if we're trading below and holding below 2110, we're back in the range, right? The bottom of the range is all the way back down at approximately 2070, and then the top of the range would be this 2110. I'm hoping the backside test of 2110 provides us with an opportunity to get long and that we hold that 2110, and then we can go back up and explore the 2120 to 2130 area above, and that we actually set up some pretty good summer trading would be my hope. Either way, today was not my ideal market. I don't make a lot of money on trend days. My primary objective is to not get run over, and I met that objective, right? I met that objective, and I did a good job of recognizing that the price action wasn't one that really suits me. And so I'd say I met all of my goals for today. So anyways, I think it was a good day. I'm looking forward to the trading opportunities that will be presented tomorrow. Greece is obviously still on the table. The sooner we move away from this hanging on every little deal about Greece, I still think the risk in the trade is to the upside, not to the downside. I hate getting bullish at the top, right? I hate getting bullish at the top, but it sure seems like if they can get this thing resolved, that there would be another flood of money coming into the market. Clearly, the Fed has indicated that they're not going to change policy anytime soon. The market has responded favorably to that point. The only thing that I'll remind everyone is the last time we were up in this area, we experienced an enormous amount of distribution. It was slow, grindy, and choppy. So, again, look in the morning, measure your rotation size, right? Look at the type of volume that's going off in the day, and then look at the ability to get gap fill and half gap as signs of strength, and we'll start the whole process again over tomorrow morning. Remember, this is a day-by-day process, and not all markets are great trading markets. Sometimes we're just simply biding our time until we get to a great trading market. The more pressure you crank up on yourself to kill it every single day, the harder trading becomes. The less pressure you put on yourself every day, and the more attention you pay to your journaling, to your process, and to judging your performance based on your adherence to your process, the better you do. So anyways, my name is Simon. I'm with Trade and Perform Coaching, and I'm going to post this both to the public and the private Twitter feed. I hope this helped a few people out. I hope everyone did well today, and I hope everyone was nice to themselves. As traders, don't shred yourself, man. It does not help you stay in a learning mode, and staying in a learning mode in this business is everything. So have a good night, guys. I will see everyone in the room first thing tomorrow morning. Talk to you all later.